I'm going to start this video with a very simple question. How do you manage your risk? I know it's a straightforward question, but you'll be surprised how many people actually get this wrong. In today's video, I'm going to be going over risk management as a whole, what people are getting wrong, how I am currently managing risk versus how I used to, and I'm also going to be talking about the program or the app that I use to very quickly work out my risk based on every single trade, because I've had a lot of questions about this from the videos I've done about my silver bullet strategy and all the other strategies that I've been doing, which are very low time frame scalping strategies, which require you to get into your trades very quickly. So you need to be able to work out your risk based off of your stop loss and the percentage that you want to risk for that trade. I know it sounds like a lot. So let's start from the beginning. What is risk management? So a lot of people think that risk management is essentially just what you're going to risk in the beginning. So let's say I have $1,000 and I am willing to risk that. I'm willing to lose that, which is the right way to go about it. You know, you're doing that right, but they think that's it. That is my risk. I'm risking $1,000. I'm just going to go trade and hopefully we can make that 1,000 into more. And that's just the first step. So there's a lot more that goes into risk than just the actual money you're risking, because that is your account. That is essentially your whole account. That is what you want to protect. So how are you going to protect that? So the next thing I want to talk about risk management is how much are you going to risk per trade of your account. So for most people, you'll be looking at like 1% per trade. But how do you do that? How do you get exactly 1% per trade? A lot of people don't know how to do this. And a lot of people will be risking, for example, they have $1,000 account and they will just risk one lot, right? So they'll say, I'm only going to risk one lot every trade. So it's going to be the same. I'm risking the same amount every single trade, only one lot. No, you're not. You're starting with the same risk, but if your stop loss changes based on your trade setup, then you're risking a different amount every single trade. And I'm going to show you that quickly with an example now. So we're on a live market here. We're on the 1 minute. So let's say your strategy, you trade 1 minute, 5 minute, 15 minute. You're entering on different time frames. Let's just say for argument's sake. So let's say on the 1 minute over here, I am going to be entering my position over here and my stop loss is over there. It's 6.9 pips and my take profit doesn't matter for the actual initial risk. The stop loss is what dictates your risk. So now 6.9 pips, that's how much price has to move to stop me out. Now, if you're risking one lot, that would be around, I think it's around $69. So you're now risking $69 of your account if that goes that far. That sounds fine. That's okay, right? But let's say, for example, I say, okay, I'm trading on the 15 minute. And it's a similar setup. I'm looking at more down here. Let's say that order block over there, but I want my stop to be all the way down over there, right? So now all of a sudden, my stop is 12.3 pips. Now I'm still risking the same, right? According to you or that person, I'm still risking only one lot. So, you know, why should it change? Because my stop loss has now changed. So now when I hit the stop loss, instead of losing that $65 or whatever it was, risking one lot, I'm now losing double that, $123. I'll be losing $123. So that is a very, very clear example on why you cannot just always risk the same lot. You've got to risk in percentage, and percentage is calculated by your stop loss. Wherever your stop loss is going to be, that's where you're going to be calculating your risk. Your risk is calculated on that. So I could risk 1%, let's say $100. I can risk 1% on this account, no matter where my stop is. That's 1%. That's 1%. That's still going to be 1%. Not if I'm moving so I want to be very clear here. Once you have entered the trade based on a stop, it's set. You cannot then move your stop, because as you're moving your stop further away, you then are increasing your loss. So your stop should always be set. Don't touch it. It either hits it or it doesn't. Depending on, most strategies, that's the way it is. That's the basic of your risk and how your risk is calculated. So a lot of people struggle with, because they will do their analysis on TradingView, but then they will go over to MT5 or MT4 to actually enter. So they don't know, how am I calculating my risk? So before I do that, I actually want to show you this example as well on MT5, because it's actually a clearer example. Okay, so we're on MT5. This is actually a trial account that I've now set up with the Funded Trader, because they now do that, which is really cool. But here we go, an example. I am going to risk, let's just say, for example, just to make it a little bit more interesting, 5 lots. Okay, that's quite a lot. Let's say 3 lots. I've got a $1,000 account. I'm going to risk 3 lots. So we are on the 1 minute. And I'm going to enter on this fair value gap over there. Buy limit for 3. I hope this doesn't go in and tap. I'm just trying to explain it here. I don't want it to tap me in. So let's just do this quickly before it comes back and actually taps me in. Modify. So here's my stop. My stop over there would mean that I would lose $177. Now let's just, for example, run down to the 1 hour. And I say, actually, I want my stop to be over here. I want to be under this low. Now, $177 was what I was going to lose. Now I'm going to lose $573. So you can see that same 3 lots, if I change where my stop is, all of a sudden is going to lose me $500, half of my account. Okay, obviously I would never be trading that. Let me just close this because I don't want to actually fill me in. So that's a very good example of your stop dictating how much you lose. Okay, so now I'm going to quickly show you how I used to work out risk, or how you would work out risk based on your stop loss. So here we are, Euro USD. We're on TradingView. This is where we've got our, I'm actually going to put it a little bit lower, because otherwise I might end up actually triggering the trade, which I don't want to do because it's just an example. So here we go. This is our stop is going to be 11.3 pips. So you would go then to a calculator online. There's a lot of places you can find a calculator. So let's see, for example, baby pips. I've opened up a few here, baby pips. This one is cashback Forex. So what you want to do is you want to go to the instrument, the currency, account balance, stop loss. Okay, 11.3. And then we want to risk 1%, and the Euro USD 1 pip size is 0.01. Now this might change because we are actually on a 1 to 200. I think TFT uses a 1 to 200 leverage. So it's important that you know what leverage you're using on your account. So then we calculate this, and it says we are going to be using an 8.85 lot. So let's jump over to, there we go. So 8.85 buy limit. Okay, let's just put in our stop quickly. So our stop was going to be over there, and let's see what that gives us. So what is that? It's about 982. So that's about your 1,000, your 1%. Okay. So if I was putting in the exact information from TradingView, I would actually be double clicking this, and I would be grabbing the entry price, copying it, going over to there. You can see how long this takes. Pasting it in, paste, modify. That's a little bit lower. Then I would go back, and I would have to then grab my stop loss price, copy. Then I'd have to go back over, and I'd have to click that, and then I'd have to paste that in, modify. So there we go. So let's see what that is now. Exactly 1,000. So you can see if I put in the exact amounts from my TradingView position, you can see it gives me the exact amount, 1,000. So that's how you would work it out if you want to actually get it. Now you can see how that can actually be troublesome if you're trading this on a very low time frame, because sometimes, like if the pending order is far away, that's fine. But what if you are on doing your trade is market execution, which means you want to get into the position as soon as something happens. Let's say, for example, an EMA cross. As soon as it crosses, you're in the market. Your stop is below the EMA or the recent swing. You've got to very quickly work out exactly what your stop is. And you could have a situation where the cross happens and the candle moves and off it goes. And you are 2, 3, 4, 5 seconds later, and you've already missed half of your profit. So this is why, it can be very difficult to get in and out of these positions very quickly when you're trying to work that out. So I'm going to show you what I do now and what I use, and you don't have to use the exact same one I'm using. There's a lot of tools out there, but I would suggest, if you are trading lower time frames, to work out your risk by using a tool that does it very quickly. So let me go back, close that, and I will show you. I use this one called the Risk Calculator app, and it's actually not that expensive. I think it's about $9.99 per month for one account. So if you're just trading one account, and I find that I only need one because I can use that one account to very quickly work out exactly what I'm risking for another account. Okay, so I'm going to show you this quickly, and I'm going to show you the same trade. So we're going to go over the same setup, and you saw how long it took me. And now I'm going to show you, I have this already set up on here. So all I've got to do is double click the risk calculator. And I'm just going to change the 1% is the same. The ratio, I'm just going to do, let's do a 1 to 2 to 2. And then my stops initially, I'll just do 10 as a starting point. And that's all I need for now. And don't worry too much about all of this. Okay. So I'm going to hide that because I no longer need that. So now all I need to do, guys, is I need to just say, okay, I'm risking 1%. That's already in there. So I got a pending order. It gives me the pending order. I drag this to where I was going to enter it. And then I drag this to where I want it to be. Okay, over there. And I say, enter. Done. How quick was that? I've now got the exact right position. You'll see right over there, $1,000. It worked it out for me exactly. So let me just cancel this trade. I'll close this trade. Let's say my stop was actually a bit bigger. Very easy. I'm going to just do it to there, and my stop's all the way down over there. So it's a much bigger stop. You can see that, and I say enter. What is my stop? $999, $1,000. So quick and easy, guys. So let's say, for example, I had, let me just remove this. I was on TradingView. So let's say, for example, we want to get into a very quick execution. Okay, so we want to risk 0.5%. So I'm going to change it now. I'm only risking 0.5%. This is, I'm taking it on a sell here. I should probably not be selling here, but anyway, I want to sell right here as soon as this candle closes. Okay, so let's go over to there. So I'm saying that I want to take a sell. Actually, my risk is going to be 0.5. I want a sell calculation. From there, my stop's going to be about there, and I am then going to execute trade. Done. I'm in the trade. It was that quick, guys. So even for an execution, I'm in the trade and I'm ready to go. So that's how quick and easy it is to just get in and out of a trade with a calculator. Now you get a lot of different calculators. This is the one I use, but I would highly recommend using a calculator. You don't have to use this one. I'm not affiliated to them, but I do think it's a very good app, or a very good extension or add-on to your MT5, MT4. I think it works for both. And there's a lot of other things you can do, which I'm actually going to talk about now. So I'm going to leave that to play out. We'll see how that goes. So there's another part of risk management, guys, and that is you can either, based on your strategy, just set and forget, which means you will either hit the stop or you will hit the take profit, and that's it, right? Now, another way you can manage your risk is, for example, let's remove this. You can say, okay, so this is my position. Let's say price comes down, taps me in, moves up to about 1-to-1, okay, let me just leave that there. It's at 1-to-1. I can then close 50% of my position, right? 50% is off the table. The target still remains, the rest of the target remains, and then I can move my stop to the entry. So now, worst case scenario, I cannot lose money. If price now comes down and goes that way, I've taken 50% of that position already. So I've actually made money, and it's fine. Another way you can do that is, let's say the same thing happens. It taps you in, pushes up to 1%. You don't close 50%, but you just move this to the entry. So worst case scenario, you break even, you don't lose anything on that trade. So essentially you want it to move to a certain point. You'll then take something off and move the stop, or just move the stop, so you are securing, a no loss on that trade. So that's another way you can manage your risk, okay? So there's a lot of different ways that you can do this. You've got to make sure that you are back testing this and sticking to that. Don't change it while you're trading. Make sure that this is how you do it, and it'll always be the same. So whatever you decide, however you decide to manage your risk, stick to that in the live market. Don't start changing it, okay? Because you've done your tests, you've got your data, and you want to make sure it stays the same. All right, we're in the positive. What a bonus. Let's close that. So now what I could do, guys, is I could close half. I select the trade, and this is what I was talking about. This actually manages it for you. So if you look over here, guys, you look over here and the volume, I'm going to say close half. And just like that, I've taken off half, and now I can actually stop loss to break even. Click that. Has it done it? Oh no, I've got to enter the trade. So this is the trade, stop loss to break even. There we go. You see the stop was moved to break even just like that, and it's sorted for me. So now no matter what happens, I'm sticking to that. I can keep that profit. I'm going to close it there because I'm actually in the green, made $36. Lovely jubbly. But there you can see, so not only can you get into trades really quickly and make sure that your risk is always the same. If you are risking 1%, then it's always going to be there. If you're always risking the same, then make sure this is always there. 1%, $1,000. Now, let's say you want to risk an exact cash amount all the time. You can actually do that. You put in cash, or you can say, okay, I want to risk 1,500. There we go. And that goes to 1.5%. So you can either do it by percent or by cash amount. So there you can see that you can very quickly get in and out of trades. And you can also do your management. You can manage your risk. And you can actually, if I go to the settings, I can close custom. So that close custom, let's say I have a very cool management trick that I use, that I close 75%. Okay, I close 75% when it reaches 0.75. So as soon as it gets to that point, I'll select my trade, obviously, and then I'll just say close custom, because I know I've set it to 75%. So it'll take 75% of the position off, leaving 15% on. So depending on what your strategy is, it's so easy to manage. And getting a manager like this that does everything for you is a very good idea, because it takes the stress off the table, and you can just get on with your trades and follow your strategy. Because sometimes you can do as much back testing as you want, but this can actually screw you when you're trying to calculate. I've had this in the past where I'm trying to quickly calculate something, it doesn't work, I get all stressed, and then I end up doing something wrong, getting the wrong lot size, and actually losing more than I wanted to. So this is the risk calculator that I use, guys. You guys were asking about it, so I hope that is clear. So there we go, guys. That's the video. That's a little bit about risk management, about how people sometimes get it wrong, how you can always risk the same. Make sure you're always risking in percentage rather than a lot size, and try a risk calculator or a risk manager within your trading platform. I'm sure there's a lot of free ones out there that do the same, and they basically will get you in and out of trades. They might not have all the management features that this one does, but the most important thing is to be able to work out your risk based on your what percentage you want to risk per trade and where your stop is, and that is how you calculate your lot size. So these calculators do that very quickly, and that's the main thing, and most free ones will do that for you. So that's it, guys. I hope you found this video informative. I hope it helps out, and make sure you're getting your risk management right, because it's such an important part of trading. With that being said, guys, I'm going to leave you there, but if you did like this video, you'll probably also like this one, so be sure to check that out. Bye bye.